Hey, what's up everyone? It's your guy, Josh Carter, back with another deep dive into the world of finance. Today, we're tackling a pressing issue that's got investors worldwide on edge. President Trump has announced tariffs on 185 countries, a move that's shaking up global markets and sparking fears of a recession. But here's the deal, even in times of economic uncertainty, there are strategies to not just protect your wealth, but to grow it. So how can you make money investing while these tariffs are in play? Stick around and let's break it down, but before we do, subscribe to the channel and give this video a like. Now on to our video. Part 1. Understanding the tariffs. First, let's get a clear picture of what's happening. President Trump has initiated a series of tariffs affecting a vast array of countries. These tariffs are essentially taxes on imported goods, making them more expensive and aiming to encourage consumers to buy domestic products. For instance, there's a 54% tariff on Chinese imports and a 20% tariff on goods from the European Union. The goal here is to reduce trade deficits and bolster American industries. However, these actions have led to significant market volatility and concerns about a potential global recession. Part 2. Immediate market reactions. The markets have responded swiftly and sharply. The S&P 500 experienced a 4.8% drop in a single day, erasing over $2 trillion in value. Retailers, tech companies, and airlines were among the hardest hit. For example, Best Buy stock declined by 17.8% and Dell saw a 19% drop. This kind of market turbulence can be unsettling, but it's crucial to understand that volatility also presents opportunities. Part 3. Identifying resilient sectors. In times of economic uncertainty, certain sectors tend to be more resilient. Let's explore these. A. Consumer staples. Companies that produce essential goods, think food, beverages, and household items, often maintain steady performance. People still need to buy groceries and basic necessities regardless of economic conditions. For instance, Kroger, a major grocery chain, saw its stock climb by 5.2% during recent market downturns. B. Healthcare and pharmaceuticals. Healthcare is a non-negotiable expense for most individuals. Pharmaceutical companies and health insurers often remain stable or even see gains during market volatility. Johnson & Johnson, for example, experienced stock gains amidst the recent sell-off. C. Discount retailers. During economic downturns, consumers tend to seek more affordable shopping options. Discount retailers like TJX Companies, which owns TJ Maxx and Marshalls, often benefit from this shift in consumer behavior. Part 4. Investment strategies during tariffs. Now that we've identified resilient sectors, let's discuss specific investment strategies. A. Diversification. Spreading your investments across various asset classes can help mitigate risk. This means not putting all your money into one sector or type of investment. A well-diversified portfolio might include stocks, bonds, real estate, and commodities. B. Focus on domestic companies. With tariffs making imported goods more expensive, domestic companies that rely less on international supply chains may have a competitive advantage. Investing in such companies can be a prudent move. C. Consider defensive stocks. Defensive stocks are those that provide consistent dividends and stable earnings regardless of the overall state of the market. Utilities and consumer staples are typical examples. These stocks might not offer rapid growth, but they can provide stability during turbulent times. D. Explore precious metals. Commodities like gold often serve as safe haven assets during economic uncertainty. Investing in gold or gold-related assets can provide a hedge against market volatility. Part 6. Staying informed and flexible. The economic landscape is continually evolving, especially with ongoing geopolitical events like these tariffs. Staying informed through reliable financial news sources and being prepared to adjust your investment strategy is crucial. Regularly reviewing and rebalancing your portfolio ensures it aligns with your financial goals and risk tolerance. Part 7. Seeking professional advice. If you're uncertain about navigating these complex market conditions, consulting with a financial advisor can provide personalized guidance tailored to your financial situation and goals. Conclusion. Navigating the investment world during times of significant policy changes, like the imposition of widespread tariffs, can be challenging. However, by understanding the implications, identifying resilient sectors, diversifying your portfolio, and staying informed, you can position yourself to not only protect your assets, but also find opportunities for growth. Remember, every economic challenge also presents potential opportunities for those prepared to seize them. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insights into making your money work for you. Drop a comment below with your thoughts or questions. Let's keep the conversation going. Until next time, this is Josh Carter, empowering you to achieve financial success. Peace. Thanks for tuning in. Remember, the key to successful investing is not to react impulsively, but to strategize thoughtfully. Stay informed, stay diversified, and stay proactive. Catch you in the next video.